Well, we have the estimated consumption in the solar panels industry is about 160 million ounces of silver this coming year, 2023. Then the automotive sector, the electrical automotive sector, is estimated to be slightly shy of 100 million ounces of silver. So you've got two industries consuming about 30% of the world's supply of silver. The estimate for 2023 is 1.4 billion ounces. And where's that silver going to come from? The miners aren't producing any more silver.
Keith Neumeyer, the president and CEO of First Majestic Silver, predicts that the silver price will reach triple digits due to the rising industrial demand. He also expresses his optimism about gold in 2023 while shedding light on First Majestic's mining operations and bullion sales. Neumeyer highlights the impact of inflation on the silver industry and identifies auto manufacturers as potential drivers of silver demand due to the metal's use in electric vehicles. Additionally, he addresses the challenge of silver recycling and the limited supplies of similar metals, noting that higher prices will be required to recover and bring these metals to refiners and recyclers. Neumeyer acknowledges the difficulty of the recycling business, where metals are hard to recover from e-waste. The silver price made waves in 2020 when it rose above US $20 per ounce for the first time in 4 years. Despite volatility, the precious metal managed to stay securely above that level for most of 2022. Keith has noticed a surge in inquiries from prominent institutional funds regarding silver. He asserts that every asset should be valued based on the actual principles of supply and demand. Before beginning the video, make sure to subscribe to our channel and click the bell icon to receive notifications about future engaging and informative content.
Well, I think what the institutions would wake up to the supply-demand fundamentals of silver. I think lithium is getting a little bit overheated right now because we've seen some pretty interesting investments in that sector. But nevertheless, it does, wake the industry up because right now there's no institutional following in the mining sector as a whole. Right. Maybe lithium is a bit of a different world because of what's going on there. But in the silver gold sector, the institutions are gone. They're not investing.
So where is that silver going to come from?
That's a good question. We need higher prices.
What about recycling, for example?
Recycling, is not increasing to any great degree because prices aren't going up. We saw recycling peak out at 250 million ounces back in 2015, I think it was. It could have been 2016. But today, recycling is 125 million ounces, half of what it was back then. At these prices, who's recycling silver? It's not economic. You can't remove the silver from computers or cell phones where a lot of this silver is being used. And, when was the last time you recycled a television? These televisions go into waste dumps. Yeah. They get taken away, refrigerators, ovens, stoves, household appliances, all this just gets thrown into waste dumps. Yeah, mutual funds, pension fund, the whole group, hedge funds, of course, all of these large investors who, are active in the market. Most of them, chase markets. That's just kind of a human nature thing that occurs. But when there's really no solid work being done by the big institutions on the supply-demand fundamentals of virtually any metal. Whether it's, and we're seeing supply problems in all metals across the board. Silver, of course, is a very small market, and it's being we're not seeing it in price. But just as I said, the supply-demand fundamentals are quite amazing for the metal.
The annual inflation rate in the U.S. slowed only slightly to 6.4% in January of 2023 from 6.5% in December, less than market forecasts of 6.2%. The slight decline raised concerns that the U.S. Federal Reserve may continue to uphold higher interest rates for an extended period, resulting in more expensive borrowing compared to previous years, which could have the potential to impede economic growth.
Well, if you compare today to, let's say the 1940s, after World War II, inflation took off. When everyone came back to their respective countries after the war had stopped, there was a big supply crunch, and inflation. I think it was north of 10%. I think it was around 15% inflation in the late 40s. And the government of the time decided that they would incentivize industry to produce more product. And they were able to squash inflation in less than 2 years as a result.
Supply side economics.
Right.
Yeah.
So, supply more products, and squash prices. Unfortunately, what's happening today is the Feds are not only increasing interest rates, but they're also squashing the supply chain. by de-incentivizing industry from producing more product, cutting off oil supplies and so on and so forth. We get into a political discussion on what's going on globally, but nevertheless, so the world is being impacted by not only reduced supply of products, but also higher interest rates. And that is going to set a stage, I think, for a long-term inflationary cycle. We may have ups and downs, and nothing's ever straight line. But I think that I wouldn't be at all surprised within call it 2024, 2025 to see north of 10% inflation.
After a disappointing February, the gold market is seeing some new life as prices have held solid support above $1,800 an ounce and now look to end the week above $1,850 an ounce. After experiencing a 5-week losing streak, gold has exhibited significant technical momentum with a 2% increase by the end of the week. Notably, the precious metals prices have risen above their 21-day moving average, indicating a favorable outlook. Furthermore, despite a notable surge in U.S. bond yields, the recent gains have added to the optimistic momentum. Keith has observed a rise in inquiries from major institutional funds regarding silver, likely due to the elevated silver-to-gold ratio that has piqued the interest of many investors.
I think that the central banks were record buyers last year. There's a reason for that, and that obviously, they're not coming clean on why that is happening. Whether it's the petrodollar, whether it's the oil being paid for in other currencies, Chinese yen or gold, or India's come out very clearly and said it's not going to follow the what I'm getting at, and I just think that the demand for gold is going to increase dramatically by most investors, and that's going to cause prices. I think silver is going to be somewhat delayed because of the economy, because it is an industrial metal. Gold is a currency, and gold is the granddaddy of all currencies. So it's going to move first, and it will drag, of course, silver, but I think silver is going to be delayed by probably 1 to 2 years.
So $3,000 gold, $30 silver?
Mm-hmm.
Wow.
I know.
What would that mean for that gold-silver ratio?
100 to 1 ratio.
Yeah.
I know, but...
According to Keith, the world's demand for silver will surpass the amount that can be produced. He believes that the mining industry will transform into a more efficient business in the next decade. On April 30, 2021, First Majestic purchased the Jarrett Canyon gold mine from Sprott Mining Incorporated. First Majestic silver fell 16.5% to US $5.98 per share after the miner reported February 23 that fourth quarter production dropped 14% to 7.6 million oz of silver equivalent compared with a year earlier. Keith expresses concern about the pricing mechanisms in place for metals and argues that the COMEX should be eliminated. First Majestic's strategy involves selling bars directly to the industry, which frequently bypasses the futures market. He also provides insights into First Majestic's mining operations, its bullion sales, and the effects of inflation on the silver industry. Let's listen to his remarks.
Fortunately, 80% of our production comes from 3 mines that are all profitable. But Jarrett Canyon, which is our most recent acquisition, it's burning cash. We've turned around a lot of mines in our 20-year history. 2023 is our 20th year. And every mine that we've purchased in that period of time has had a problem. You can't buy a mine that doesn't have a problem. And why would someone sell a mine that has no problems? So we have a view on Jarrett Canyon. Our technical staff thinks it can be turned around. It's taking longer than we have thought, and it's costing a substantial amount of money to do it. We still have a view that it can be turned around, but it's affected by a couple of things. One is that the contractors on site are very high-cost contractors, and we adopted them through the acquisition. I think the solution, or we think the solution, is go to self-mining.
According to Neumeyer, there is a finite amount of silver available on the surface, and once it is depleted, there will be no other source of the metal. Therefore, he suggests that an increase in silver prices is necessary to sustain the industry. Notably, Neumeyer identifies silver as a strategic metal alongside lithium and nickel. He also expresses doubt about meeting certain targets within the given time frame. That concludes our conversation for today. We welcome your opinions in the comment section below. If you found this video informative or enjoyable, please give it a thumbs up. Don't forget to subscribe to our channel to stay abreast of the newest videos and news. We'll see you again soon.